My friends, gather round. Let me tell you about the most dangerous epidemic on Wall Street. And no, I'm not talking about market crashes or inflation. I'm talking about emotional contagion, that silent killer of investment returns that spreads faster than any rumor on the trading floor. You know that gut-churning feeling when you open your portfolio and see everything bleeding red? When your phone starts blowing up with texts from worried friends, and suddenly you're wondering if you should sell everything before it's too late. That's not just normal concern. That's emotional electricity jumping from one investor to another, and it's about to hijack your better judgment. I've watched this movie play out for decades. The 1929 crash, the 1987 Black Monday, the dot-com bubble, 2008. Different eras, same human psychology. People who were lengjing and rational one day become panic-stricken herd animals the next. Why? Because fear is more contagious than the common cold, and it doesn't need logic to spread. Remember my old friend Mr. Market, that emotionally unstable business partner I told you about? Well, emotional contagion is when you start catching his wild mood swings instead of recognizing his insanity. When he's manic and offering ridiculous prices, you get greedy. When he's depressed and selling everything cheap, you get fearful. And before you know it, you're not making decisions. You're having emotional reactions. Think about the last time you saw a market sell-off. Notice how the panic traveled? First, it's the financial news with their dramatic market meltdown headlines. Then your investing group chat lights up with panic emojis. Your coworker starts talking about moving everything to cash. Suddenly, you're questioning investments you thoroughly researched months ago. That's emotional contagion in action, my friends, and it's cost ordinary investors more money than all the bear markets combined. Here's what they don't teach in business school. Your brain is biologically wired to catch emotions. Those mirror neurons fire up when you see others panicking, and you literally start feeling their fear. It's an ancient survival mechanism that worked great when we were running from saber-toothed tigers, but it's financial suicide in modern markets. The most insidious part? Emotional contagion feels like wisdom in the moment. When everyone's rushing for the exits, standing still feels reckless. When the crowd's buying like there's no tomorrow, sitting out feels like you're missing the boat. But let me be clear, true investing isn't about following the herd. It's about having the courage to think independently when everyone else is losing their damn minds. So next time you feel that panic starting to bubble up, I want you to pause and ask yourself, is this my rational assessment of the situation, or am I just catching someone else's fear virus? Have the fundamentals of my companies actually changed, or am I just reacting to the emotional temperature of the room? Stay with me, because in our next session, we're going deep into Mr. Market's bag of tricks. I'll show you exactly how he uses emotional contagion against you, and more importantly, how you can build psychological immunity. Because at the end of the day, the most valuable asset in your portfolio isn't stocks or bonds. It's a calm, disciplined mind that can't be infected by other people's panic. Because at the end of the day, the most valuable asset in your portfolio isn't stocks or bonds. It's a calm, disciplined mind that can't be infected by other people's panic. Now let me pull back the curtain and show you exactly how this emotional contagion operates in the wild. You see, Mr. Market isn't just emotionally unstable. He's a brilliant puppeteer pulling the strings of crowd psychology, and he's been practicing his craft for centuries. Think about the last time you watched a market panic unfold. It starts subtly, maybe with a worried headline, then a friend's anxious text. But within hours, it builds into this overwhelming tidal wave of fear that makes even the most seasoned investors question their judgment. I've seen it happen in every major crisis from the Great Depression to the 2008 financial meltdown. The pattern is always the same: rational people abandoning carefully crafted investment plans because the emotional temperature in the room became too hot to handle. Here's what's really happening beneath the surface. Your brain has these ancient wiring systems called mirror neurons that literally make you feel what others are feeling. When you see fear on someone's face, your brain practices being fearful. When everyone around you is panicking, your nervous system starts mirroring that panic. This was brilliant evolutionary programming when we were cave people facing real physical threats. But in modern markets, it's like bringing a spear to a nuclear war. Let me give you a concrete example from my own experience. During the 1973 to 74 bear market, I watched institutional investors with decades of experience sell wonderful businesses at absurdly cheap prices. Why? Because the emotional contagion had become so powerful that holding felt reckless. The fear wasn't just in the numbers, it was in the air, in every conversation, in the pit of your stomach. Yet those who maintained their discipline and bought during that emotional hurricane made fortunes in the following years. The most dangerous aspect of emotional contagion is how rational it feels in the moment. When everyone's running for the exits, standing still seems insane. When the crowd is buying like there's no tomorrow, staying cautious feels like you're missing out. This is what psychologists call social proof, our deep-seated belief that if everyone else is doing something, they must know something we don't. But here's the truth I've learned over 6 decades. The crowd is usually wrong at emotional extremes. The moment everyone becomes certain the boom will never end is typically when it's about to collapse. The instant everyone believes the collapse will continue forever is usually when recovery begins. Your job as an intelligent investor isn't to predict these turning points. It's to recognize when emotional contagion has created such distorted prices that extraordinary opportunities emerge. So the next time you feel that emotional pull to follow the herd, I want you to pause and ask yourself one simple question. Am I making this decision based on fundamental value, or am I just catching someone else's emotional virus? If you can't explain your investment thesis without mentioning recent price movements or media headlines, you've likely been infected. In our next segment, we'll roll up our sleeves and I'll give you my battle-tested techniques for building emotional immunity. The same strategies that helped me and my students prosper through every market cycle since the Great Depression. Because in this game, the ultimate edge isn't intelligence, it's emotional independence. Because in this game, the ultimate edge isn't intelligence, it's emotional independence. Now, let's get practical. I'm going to give you the same tools I've taught my most successful students over the years. Concrete strategies to build what I call psychological immunity against market madness. These aren't complicated formulas. They're mental frameworks that will protect you when everyone else is losing their heads. First, let's talk about the quarantine technique. Just like doctors isolate patients during an outbreak, you need to quarantine yourself from emotional sources during market extremes. When panic or euphoria starts spreading, I want you to physically distance yourself from the noise. Turn off the financial news. Mute the stock ticker. Stop checking your portfolio every 5 minutes. I literally used to take walks in the park when markets got too noisy, because sometimes the best investment decision is not to make one while infected with emotional contagion. Second, implement what I call the fundamentals filter. Before making any investment decision during emotional times, you must write down 3 fundamental reasons for your action that have nothing to do with recent price movements. Is the company's competitive position weakening? Are their earnings deteriorating? Is the industry facing structural changes? If you can't find 3 fundamental reasons, you're likely reacting to emotions, not analyzing value. Third, create your emotional circuit breaker. This is a simple rule. Never make significant investment decisions during market hours when emotions run hottest. Sleep on it. Let the emotional fever break overnight. Some of my best decisions came from reviewing situations with fresh eyes the next morning, away from the market's emotional intensity. But here's the most powerful technique of all, what I call pre-commitment strategy. You decide in advance, during calm moments, exactly what you'll do. During emotional storms, write it down, sign it, put it in your trading plan. For example, if the market drops 30%, I will invest X dollars in these 5 quality companies. Or if everyone becomes euphoric and PE ratios exceed 25, I will sell Y% of my positions. This takes the emotion out of the moment because you're just executing a plan you made when you were thinking clearly. I used this technique myself during the 1930s. When fear was at its peak, I had predetermined shopping lists of wonderful businesses trading at absurd prices. While others were paralyzed by emotion, I was systematically executing a plan made during clearer times. Remember, Mr. Market's greatest weapon is surprise. He wants to catch you off guard, make you react rather than reflect. By having these psychological tools ready, you turn his greatest strength into his greatest weakness. In our final segment, I'll share the ultimate framework for maintaining emotional discipline through any market cycle, the same approach that helped create some of the most successful investors in history. This is where we separate the amateurs from the professionals, and I think you're ready for it. This is where we separate the amateurs from the professionals, and I think you're ready for it. Welcome to the masterclass, my friends. We've built your emotional immunity. Now I'm going to show you how to turn psychological weakness into massive financial gains and passive income streams that could potentially generate $100,000, $500,000, even $1 million over time. This is the ultimate wealth creation strategy they tried to bury. Let me introduce the Millionaire Mindset Framework. While others panic, you'll be positioning yourself for financial freedom and early retirement. I'm talking about building generational wealth through what I call emotional arbitrage, buying when blood fills the streets and selling when greed takes over. This is how the top 1% actually builds their fortunes, not through day trading, but through strategic patience. Now for the secret sauce, Wall Street doesn't want you to know. Combine this with gold and Bitcoin during crisis moments, and you create an unstoppable wealth protection system. When everyone's fleeing to cash, the smart money is moving into hard assets and crypto. That's your hidden advantage. Here's your step-by-step blueprint for the next market crash. First, the $1 million checklist. When fear index hits extremes, that's your green light to buy undervalued stocks with massive upside. Second, the gold and crypto protection plan. Always allocate 10 to 20% to gold and Bitcoin as insurance against market collapse. Third, the passive income engine. Build dividend stocks that pay you every month while you sleep. But the real game changer, what I call the overnight success formula. It took me decades to perfect, but you can implement it immediately. Most people chase get rich quick schemes. You'll be building real wealth through compound interest and value investing. That's how you go from zero to hero, from broke to millionaire. Remember, the market's greatest secret isn't some complex algorithm. It's understanding that emotional contagion creates millionaire opportunities every few years. The 2008 crisis created fortune makers. The COVID crash created overnight millionaires. The next panic will create the next wave of wealthy investors. And you now have the playbook. They told you to save pennies. I'm telling you to think in millions. They taught you to avoid risk. I'm showing you how to embrace calculated opportunities that could 10 times your money. This isn't just investing. This is financial revolution. As we finish, I want you to remember, the difference between struggling and financial freedom isn't intelligence. It's emotional mastery combined with these forbidden strategies. You now hold the keys to the kingdom. The same secret principles that built massive fortunes throughout history. Now go out there and claim your $1 million destiny. Build that passive income machine. Achieve that early retirement. You're not just an investor anymore. You're a wealth creator. The world's waiting for your success story.